Welcome to Caribbean Business Review, where insight meets impact. We bring you economic and financial updates, sharp statistical breakdowns, and data driven insights on the forces shaping the region. Smart analysis, bold ideas, real Caribbean intelligence. This is CBR. Okay, welcome everybody. Welcome. This is the Caribbean Business Review. My name is Joseph Cox, and with me is
Sherry and Farquharson, and I am happy to be here as co host on the Caribbean Business Review this week.
indeed, and you will be here every week. You make sure of that. No, Sherry, and as per usual, boy, we have had yet another exciting week that has just ended. It's the most amazing
Yes,
time
we
we're living
see.
in. I mean, it strikes me that, for example, in Jamaica, let's just start with a bit of regional news. In Jamaica, our commercial banks seem to be of the view, well, I shouldn't say commercial banks, but financial institutions seem to be of the view that it's opportune to increase loan rates even further. And as I call it, in defiance of the central bank, which has reduced its policy rate several times from a high of 7% down to 5.75%. And now our financial institutions are looking to push up the average lending rate to some 16.74%. It's an amazing time to be there, and at the same time, as we have heard all across the region, financial institution fees keep climbing and being adjusted day by day. So the actual effective transactions costs are going through the roof. It's a
Yeah, we've
really an
definitely
amazing
seen
time.
that. And interestingly, though, in Barbados, we see where there are more digital transactions happening. So at least the ease in fees in that regard has helped. So there is an actual uptick in persons actually doing those transfers, bank to bank, intra-bank transfers. So that is positive and good for businesses. That makes it easier for persons to make those payments online. So that is good to see that in the face of the transaction costs, there are still some opportunities where there can be some positives for the business sector. But I think the key story for me this week has been how policy continues to shape what happens in our businesses regionally and globally. And so just thinking about how in Canada you would have seen where exports grew in Q1 as US companies were stockpiling ahead of the expected tariffs. And then once those tariffs hit, you saw where exports then went down in April. And so I said, policy just continues to shape what happens in the business sector. And so those two things really need to go together to get the growth
Indeed,
that I think everybody wants to see happen.
indeed. But then on the other side of the coin, we see where the Congressional Budget Office in the United States, they have put out a rather interesting update whereby you're looking at some 10.9 million people would, if the current bill that is wending its way through the legislative process in the states, if it goes through, Mr. Trump's, what do you call it, a big beautiful bill, if it goes through, 10.9 million people will become uninsured, all right, or more people will become uninsured rather. And then you have an overall impact of the deficit jumping by some 2.7 trillion. Now, that
Yeah.
by any standard, just to afford basically your tax cuts, etc., that seems a rather strange policy dynamic that is at play. But it is these things are going to impact right across the world. And Sherry, and I mean, we also, just to keep it on the US just a little bit, it's so amazing that with the tariffs that were put on the auto imports, now you see India be taking the United States before the WTO and basically threatening retaliatory measures in 30 days if there is no resolution to the issue. So, all in all, we're looking at some really, really interesting scenarios that are unfolding.
Yeah, definitely. But one hopeful thing coming out of the region is as countries are doing their rebuilding post burial, we see in St. Vincent and the Grenadines where that is actually driving the infrastructure, and you're seeing growth in that sector, and it's good that local businesses are able to benefit, and help to shape a better tomorrow. So a good mix this week.
Indeed. Well, sometimes that is also good, eh? Even though some people would be of the view that, was it? Good, bad news sells. No, sometimes a nice mix is really necessary for us to move forward. But coming up on the program this week, in a few moments, as it were, we'll be moving into a strategy brief, the CBR briefing. Then that will be followed by, of course, the Market Watch and Global Pulse segments. This week, we're not having an Island Insights interview because we decided to do a super interview with on the strategy deep dive, and that one is with Mr. Frank Comito, who is an advisor to the Caribbean Hotel and Tourist Association. And well, he's a former director general of the CHTA, and he'll be giving us some insights into the tourism market as we see it unfolding. Then, of course, following that is our Game Changer Playbook segment, where we're really wrapping up the program for this week. So, all in all, Sherry, we seem to be having quite an interesting set of events unfolding right across the region and indeed globally.
Definitely, indeed. So I invite everyone to stay tuned for the Caribbean Business Review.
Okay, then. Across much of the Caribbean, the relationship between government and the private sector has long been defined by transactional governance, a dynamic rooted in narrow exchanges, licenses, concessions, or policy adjustments in return for compliance or investment. While this model served early developmental needs, it now limits our ability to build resilience and seize new global opportunities. Today's challenges demand a shift to strategic statecraft, a deliberate forward-looking approach where public and private sectors align to shape the region's economic future. This is not about state control or picking winners. It's about forging strategic partnerships with clear national and regional priorities guiding market activity. For the Caribbean private sector, this shift brings both responsibility and opportunity. Firms must move beyond lobbying for short-term gains and instead engage in co-creating strategies in innovation, climate resilience, energy transition, digital transformation, and regional competitiveness. Sector associations and business leaders need to build stronger capacities for policy dialogue and strategic foresight. Governments, in turn, must overhaul legacy governance practices, shifting from opaque, ad hoc deals to transparent, rules based frameworks that support broad based private sector development. This includes reforming investment facilitation, streamlining regulation, and anchoring policy in a vision that spans electoral cycles. The shift to strategic statecraft is particularly urgent as global shocks from climate risks to trade disruptions and AI driven transformations force small economies to adapt at speed. Without a new governance model, the Caribbean risks fragmentation and lost competitiveness. Ultimately, a strategic statecraft approach offers a pathway to unlock the Caribbean's potential, creating higher value jobs, driving innovation, and ensuring that economic growth is both inclusive and sustainable. The private sector must not wait to be invited, it must lead as a partner in shaping that future.
This is Market Watch for the week ending June 6, 2025. I'm Sharian Farquharson, and here's what's moving markets and shaping the business landscape across the Caribbean and beyond. We start in Belize, where inflation rose 1.3% in April compared to an earlier year, though prices slipped slightly month on month. Year-to-date inflation sits at 1.6%, driven by higher food and housing and personal care costs. Meanwhile, Belize's merchandise trade activity weakened. Imports are down 16% and exports are down nearly 22%, led by falling sugar and banana revenues. In Bermuda, inflation eased to 1.8%, the lowest since November 2024, where retail sales remained soft. Sales volumes dipped 0.2% in January despite a 2% rise in value. Hardware, auto, and apparel sectors saw declines, while grocery and liquor sales posted gains. Turning to the Bahamas, the country's inflation fell 0.1% in March, down 0.8% year on year, led by declines in transport, health, and recreation costs. The Bahamas continues to push for trade diversification and local manufacturing to manage price stability. Tourism in the Bahamas delivered a mixed performance in Q1. Arrivals rose 9% to 3.3 million, driven by an 11.4% surge in cruise passengers. However, high-value stopover tourism fell 3.3% amid global economic uncertainty and U.S. trade tensions. Short-term vacation rentals are booming, with April room nights up 23.2%. St. Vincent and the Grenadines is seeing a strong economic rebound. Government revenues are exceeding projections, and private sector growth is solid, particularly in manufacturing, construction, and hospitality. Post-barrel reconstruction has lifted capital spending to nearly double 2024 levels. In the Cayman Islands, Premier Andre Ebanks has warned of a projected $26 million deficit this year and a $44 million shortfall in 2026, despite a first quarter surplus. The government is reviewing measures and reassessing capital projects to maintain fiscal responsibility. Over in Jamaica, the National Insurance Scheme reported a 9% increase in contributions, reaching $52.2 billion. And in Barbados, electronic fund transfers surged 31.1%, with the real-time processing system helping drive adoption of digital payments. Meanwhile, Barbados is charting a $2.3 billion pathway to full electric vehicle adoption by 2040, supporting its net zero goals. In the corporate world, JMB Group reported a strong rebound. Net profit surged to $3.08 billion, driven by higher net interest income and securities gains. Trinidad Cement Limited posted a net profit of $132 million, maintaining steady revenues and operational efficiency. However, VM Investments recorded a $32.5 million Q1 loss, weighed down by higher expenses and restructuring costs, though fee and interest income rose sharply. In Guyana, private investment momentum continues. Rise Guyana closed a US $29 million real estate and infrastructure fund targeting high-impact projects like Marriott hotels and private aviation hubs. Meanwhile, ExxonMobil Guyana posted a record Guyana $1.73 trillion in revenue last year, surpassing the national budget. Operating profit hit $1.2 trillion with net income of Guyana $995 billion. Shell Trinidad and Tobago has reached a final investment decision on the Aphrodite gas field, with production set to start in 2027. The project aims to support domestic gas supply and bolster Atlantic LNG exports. Finally, the latest BOJ credit conditions survey signals that Jamaican lenders plan to raise local currency loan rates by 85 basis points through June, even as the central bank continues to ease policy. Personal loan rates are projected to rise to 18.04% and business loan rates to 16.42%. Demand remains strong among micro and small businesses, while large firms are turning more cautious. Regional exchange rates show notable variation across CARICOM. The Jamaican dollar trades at Jamaican $160.34 per USD, while the Guyanese dollar stands at Guyana $218 and the Trinidad and Tobago dollar at TT $6.80 per USD, reflecting diverse monetary landscapes across member states. On the energy market, crude oil prices experienced a modest rebound this week. Energy prices climbed, with WTI crude up 1.9% to US $64.58 and Brent crude rising 1.96% to US $66.62. Natural gas posted a 2.91% gain, while the OPEC basket held steady at US $65.10. The uptick follows a stable U.S. jobs report and renewed trade discussions between the U.S. and China, boosting market optimism. However, increased output from OPEC Plus nations and other producers is contributing to an oversupplied market, potentially exerting downward pressure on prices in the coming months. Caribbean stock markets posted mixed results this week. The JSE index gained 0.42%, BISX rose 2.11%, while Trinidad's All TNT index edged down 0.08%. Top gainers included AS Bryden and Sons up 11.16% and JMMB Group up 9.43%. And that's your market watch for this week. Stay tuned for more insights on the trends shaping the region's markets and economies.
Change. Insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
This is the Global Pulse for the week ending June 6, 2025. I'm Sherry-Ann Farquharson. The OECD has downgraded its global growth outlook, now projecting global growth of just 2.9% in both 2025 and 2026, down from 3.3% in 2024. Rising trade barriers, tight financial conditions, and a policy uncertainty are weighing on the outlook. The sharpest slowdowns are expected in the US, Canada, Mexico, and China. In the US, the OECD slashed its growth forecast to 1.6% and 1.5% next year, as Trump-era tariffs reduced immigration and economic uncertainty take their toll. Inflation is expected to remain elevated, potentially reaching 4% by year-end. Meanwhile, the U.S. services sector contracted for the first time in nearly a year, with businesses citing tariff-related cost pressures and stagflation concerns mounting. The U.S. labor market also shows signs of softening. Job openings rose slightly, but layoffs surged by nearly 200,000, and the quits rate fell, a sign of easing wage pressures. The Congressional Budget Office, CBO, projects that the GOP's major legislative package, currently under consideration by the U.S. Senate, would result in an increase of 10.9 million people without health insurance, including 1.4 million undocumented individuals currently enrolled in state-funded programs. The bill is expected to reduce federal spending by $1.3 trillion over the next decade, but its proposed $3.7 trillion in tax cuts would drive up the deficit by $2.4 trillion during the same period, the CBO analysis shows. In Canada, Q1 GDP grew by 2.2% annualized, helped by a spike in exports as US firms stockpiled ahead of tariffs. However, Canada posted a record $7.1 billion trade deficit in April as exports plunged nearly 11%, led by steep drops in auto and energy shipments. The Bank of Canada held rates steady this week at 2.75%, citing the US trade tensions as a key risk. In Europe, UK public debt is projected to hit a record 104% of GDP by 2026, with growth slowing and fiscal buffers thin. In contrast, Eurozone inflation cooled to 1.9% in May, its lowest level this year, strengthening expectations of another ECB rate cut after this week's 25 basis point reduction. Germany has announced a major tax cuts and investment package to revive its struggling economy, including phased corporate tax cuts and incentives for electric vehicles and R&D. In Asia, Japan will launch pre-arrival screening for visa-exempt travelers by 2028 to streamline immigration and boost tourism. China's suspension of rare earth metal exports is causing supply disruptions for European automakers, prompting a scramble to secure alternative mineral sources. On trade tensions, India has formally challenged the US 25% auto tariffs at the WTO, warning it may impose retaliatory duties if no resolution is reached within 30 days. In Africa, Ghana's inflation continues to ease, falling to 18.4% in May, its lowest since February 2022, helping to stabilize household budgets and boost market optimism. And finally, Bulgaria is set to adopt the euro in January 2026, having met key economic criteria, with formal approval expected from Eurozone ministers in July. Global stock markets are mostly higher this week, led by gains in the US, where the DJIA rose 1.05%, S&P 500 gained 1.03%, and the Nasdaq climbed 1.2%. European markets were mixed, with Germany's DAX down 0.08%, while Asian markets saw moderate gains. Japan's Nikkei 225 up 0.5%, and Taiwan slipping 0.6%. And that's your Global Pulse for this week. Stay tuned for more updates on how the latest global trends are shaping our region on the Caribbean Business Review.
Constant change. Insight is your greatest asset. At Joseph Cox and Associates, we empower innovation across the Caribbean. Whatever your challenge, we can help. We're proudly customer-centric, offering bespoke solutions tailored to every partner. From innovation and digital transformation to leadership and policy, our services are designed to deliver lasting impact. We partner with leaders across sectors, from finance and government to energy, tech, and infrastructure, helping them navigate complexity with confidence. Our work is grounded in collaboration. We connect regional leaders through powerful networks, driving change through joint research. Discover more at josephcox.org. Joseph Cox and Associates. Insight, experience, impact.
Okay, welcome back, everybody, to the Caribbean Business Review. My name is Joseph Cox, and as we get into our strategy deep dive, we are pleased to welcome as our special guest Frank Comito, And Frank is a special advisor for the Caribbean Hotel and Tourist Association, as well as the Caribbean Alliance for Sustainable Tourism. Now, Frank, up until January 2021, was the CEO and Director General for the Caribbean Hotel and Tourist Association, and a man with well over 40 years experience in the tourism market, which is what we're going to be speaking with Frank Comito on today. So welcome, Frank.
Thank you, Joseph. Great to see you again.
Indeed, my friend. Good to see you as well. Now, Frank, we have a lot of material to go through, and you know, of course, with these things, never enough time. And the question I want to start with is, given what we have seen in the international markets now, there is of course a reported softening in the U.S. market. Their inbound travel is down double digit. We have seen uncertainties where, for example, Jamaica and Bahamas have been indicating that they have had some challenges in terms of visitor arrivals, at least in the first quarter of this year. And basically, I suppose the question really is, with the global economic headwinds and potential trade and, of course, travel barriers, because now we hear a number of persons from a number of countries that are banned from entering into the United States, for example. How prepared are we, and how concerned should we be about what obtains now?
Well, we've been monitoring this very closely, Joseph, and we're actually not seeing, in the aggregate, collectively, the Caribbean, we're not seeing a tremendous drop in U.S. travel to the region. Slight decline. We're seeing an uptick by Canadians coming to the region and booking to come into the region by Europeans. It's probably steady, but we expect to see some increases with travel into the region from Europe. Latin America has gone up considerably over the past couple of months this year. So while we're seeing a few areas that we've got to continue to monitor, we're not seeing any massive drop of U.S. travel into the region right now.
Okay.
Now that also has to be looked at in the context. 2014 was a matching year. We just about reached, as a region, and most jurisdictions exceeded their peak year tourism arrivals performance of 2019. So we had fully recovered from the pandemic. And we're seeing strong indications that 2025 will continue in that pattern.
No, well, that's excellent news. But then when you look at what's going on, because at the same time, we do have, and there's been a long-standing issue in the region about our travel costs, with the travel taxes, etc. And that's one aspect of the debate. But the other aspect of it would now include countries like the Bahamas, Jamaica, the Belize, and Barbados, for example, already putting on in place a cruise tax. So in the one sense, we are arguing that the travel taxes are too high, but at the same time, we are not being impacted in spite of what's going on in the geopolitical space. So which is it? What is the issue?
Well, I think you got to look at it separately. The cruise industry's dynamics are different from the stopover or hotel and overnight accommodations segment of tourism. We have not seen any tremendous pushback based on rates, possibly because the cost of airline tickets has not accelerated in the past couple of months. In fact, we're seeing some reduction in the cost of airlines as the cost of air fuel has become lower as well. But historically the issue of high taxes and fees on air travel region has been a detriment to enhance greater travel, particularly intra-Caribbean travel.
Yeah, but you see, Frank, here is a challenge that I'm facing. Not to my certain memory and knowledge, Barbados and a couple of, I think it was another country,
Antigua,
possibly Antigua, right? That they had reduced their travel taxes some years ago for a short period of time. I think it was 6 months period.
Right.
But there was no appreciable movement the market just didn't respond. So are we backing up the wrong tree? What is the issue?
Well, and that occurred during a very difficult period of time. I believe that occurred about 4 years ago when we were in the pandemic as well.
Okay, yeah, okay,
So,
fair. Okay.
so I mean, I think that's a fair enough look at it. But at the same time, what we need to do when we do these kinds of things, and it's happening right now, I believe, with St. Lucia and Barbados, where the private sector and the public sector get together and coordinate their marketing, their packages, value-oriented packages. Stay 3 nights, get a night for free, or whatever that kind of. So those kinds of things need to occur to complement that. And I know there are some hotels, particularly in St. Lucia, that are with their tourism boards around.
Okay. No, but then, Frank, if we're looking at that and we're going down that road, as it were, the joint does not now introduce, which is another aspect of the conversation, the whole issue of tourism dollar retention, the retention rates, because at the same
Right.
time, I mean, and just for context, I believe the Dominican Republic is the highest, has the highest retention rate in the region at roughly 50 cents to the dollar. Jamaica is 40.8 cents, and others will be around, going in that continuum downwards. But I'm wondering, because here we have a situation where, as you quite you just suggested, that, for example, in St. Lucia, there is this collaboration with the hotels, etc., etc. But Frank, when we're looking at the tourism, when we're looking at retention issues, you're looking at external issues, you're looking at internal issues, and you're also looking at what we call invisible leakages. The external being a lot of the hotels, etc., they are owned by overseas things. Also, the airline money is being, tickets are purchased overseas,
Sure.
etc.
No, and
And so it goes on.
Those are absolutely valid points.
Right.
Now let's take the DR and Jamaica as examples, since you mentioned them.
Okay.
The ability to produce, I believe, the Dominican Republic, when I asked this question in the DR a couple of years ago, they indicated that 80% of their inputs, their product inputs, come from within the country. They have the ability. They have a much more diverse economy. They have an agricultural sector that's very strong. So their inputs they can draw on a lot of local inputs. Jamaica's done, by example, an excellent job, thanks to leadership by the government, as well as companies like Sandals, in creating stronger linkages between manufacturing, the agriculture, the cultural arts sectors into the economy. CHTA, Caribbean Hotel and Tourism Association, last year established a linkages committee, and we're actually working on a number of initiatives right now to improve the strength of our connectivity. An assessment is underway right now by the CARICOM Private Sector Organization in collaboration with Sandals and the Caribbean Hotel and Tourism Association to identify the top products that are ideal for connectivity, for creating linkages within the region. So and this takes on even added significance because of the global tariff situation and so on.
Right.
How do we buy more locally and within the region? The other challenge is, Joseph, from your time with CARICOM, is the connectivity. How do you connect it all? I was in a meeting with the Tropical Shipping former chairman last week, and we've discussed what needs to occur. He had told me that they have done an assessment with their shipping company, as well as all of the shipping companies in the Caribbean that ship within the Caribbean, to show the mapping of connectivity and the scheduling and so on. So I asked him, I said, so since we have the ability with some mapping and connectivity, what has to happen? He said, well, there has to be coordination of that. He said the other obstacle is how port fees are assessed on intra-Caribbean shipments. He used an example of a couple of baskets that he could ship to Barbados from Jamaica. If he did that, he has to ship a full container load in order to he's going to be taxed on the you know the matter. He's going to be taxed on the fee for the full container load, whether or not it's full or not.
Yeah.
Well, that doesn't make economic sense. So there's some policy kinds of initiatives that we could collectively address to improve linkages as well. And then it's just rolling over strengths through an assessment, which the CARICOM Private Sector Organization is doing right now.
Mm-hmm. No, but you say, all right, fine, I hear you on that. But you say, strengthening the local linkages, right? That's not an easy scenario. And I'm going to say, share my thoughts, guide me where I'm wrong.
Sure. No, you've been in the game, so I know it.
A number of the hotels, a number of the properties are owned, but they are part of international chains. All right. Now, where that is concerned, their procurement is more than likely centralized. So therefore, you have to be able to, for example, in terms of bed linen, for argument's sake, you have to be able to meet those international standards in terms of quality, supplies, etc., etc., etc. Similarly, exactly. Sure. Similarly, in terms of our agricultural produce, do we produce sufficiently at scale to really make a serious dent in those markets? Can we really get through those international procurement hurdles for where we are now?
We have to continue to improve in those areas. I mean, the standards are absolutely essential. I remember in the Bahamas when I was there years ago, we tried to encourage greater use by the industry of agricultural products. And there aren't many in the Bahamas, but there are enough. There was certainly enough. We basically did an assessment. We identified all the product lines that were available, what time of the year were they available, what was their quality level, and we were able to then, how do I get them? It's not just that, how do you access them as well in a timely manner, particularly when you're dealing with perishables, it's got to be timely. So with that, we were able to create, and they did a similar thing in St. Lucia, by the way. We were able to create a network that is with the buyers and the purchasers, hotels and restaurants.
Mm-hmm.
We were able to communicate on a weekly basis what products would be available, when, how, and in general, what price. And the quality had to be in there as well. Otherwise, they wouldn't buy it.
Of course.
So the communications and the coordination has to occur in a much more effective way as well. And that's why organized efforts to improve linkages, like they did in Jamaica over the years. They've been working on that for probably 20 years. Has yielded significant results. What was the example? Years ago, you had to buy all your strawberries from the United States.
Right.
Well, today, because of the activity, this is my demand, this is what I need, as the hotel would say, this is what I need, and this is what I need, and how many I need, able to talk to the farmers and say, hey, we need strawberries. Well, today, a lot of your strawberries in Jamaica are becoming Jamaica produced.
Mm. That's true.
It's not easy.
No, it's not easy. But you see, part of the additional part of the challenge that I want to put on the table is that you are looking at scenarios whereby not only you're looking at trying to put your local persons, your local producers or suppliers into the chains, but the fact of life is that you also have the situation whereby a lot of the money for the hotel rooms, for example, all inclusives, they are booked overseas. Similarly, it depends on airline package and the hotel and airline package and so on. So a lot of that money never actually comes to local.
And I'm going to say this as callously as it might sound. That's the global environment we live in. You know?
Quite
At the same time, it presents opportunity. You have tour operators in the Caribbean that have gotten into the game, and our retention is with those tour operators in the Caribbean. So we've seen some successes in those areas. Sun Tour out of Barbados, probably 7 countries or so, started out as a number of years ago, expanded. They're doing a lot of. It's all local source, locally generated. Right. They still have to pay the airline. They still pay the children. that's the global economic we live in.
No, I appreciate the point. And, to be honest with you, when we start to look at these things, what you're really pointing to, because there's a third aspect of the leakage or the retention issue, which has to do with, and this is the invisible one now, we're looking at damage to, deterioration, depreciation over time, sometimes the impact of the product on the environment, etc., etc. And there's a cost that I suppose we also have to factor in. I'm not sure if it is quantified at this point in time, but it's something that we have to look at, in order to ensure the sustainability of the product. But Frank,
today,
also, yes.
I mean, we're presented with opportunities today. I mean, I've heard a lot of doomsaying about tariffs and everything, and great concern, great concern. By the way, the collaboration between the shipping industry, the tourism industry, the CPSO, the CARICOM Private
Right.
Sector Organization, got the Caribbean exempt from port service fees.
Right.
It's a huge,
Yeah.
huge effort. But it also tells us when we work together and collaborate together, we can impact things to our advantage as a region.
No, true. But as you say that, and I'm certainly in the corner of increased collaboration, but I'm also looking at the matter of innovation within the sector. To what extent has the regional product, so to speak, has it been responsive to the market, and in terms of things like innovations?
Yeah, I mean, I think the AI and the digital renaissances, I think, are instructional in this area.
Mhm.
We've seen Caribbean Hotel and Tourism Association just has done a number of initiatives to increase the industry's readiness and ability to be involved in digital types aspects of what they do, and also AI. CHTA has done some training in that regard recently, and so on. The challenge is this, Joseph. The international chains and brands have the resources to make all of that happen. They do it within a global scale. They have a tremendous amount of financial resources that they apply, putting systems in place, training for people, and so on. Our challenge is independent operators. They're generally locally owned by Caribbean nationals as well.
Right.
A lot of folks think the entire tourism industry is owned by international companies, but in actuality, when I did research on this a number of years ago, 72% of the licensed hotels in the Bahamas were owned and operated by Bahamians. So that's where we need to put a lot of attention. We did some research a couple of years ago with the OAS report on the capacity of small and medium-sized tourism to rebound the situation. We're looking at the pandemic as an example.
Mhm.
And we found that they needed significant help in training, education, marketing support, so on, all around these trends that are going on right now, digitization, AI, and so on. So as a public and private sector, we have a role to play in improving our training and support in those areas. In Antigua, last a couple of weeks ago, 2 weeks ago, the Caribbean Hotel and Tourism Association did some training. I believe there were about 150 hotels involved in digitization types of training. How do I do this more effectively? What are the resources and tools that I can tap into, and so on? How does it convert? How does the investment of my time and a little bit of money in these areas convert into an ROI as well? So there needs to be more of that. We're in the game in that area, but we need to do more in that area, public and private sectors.
But you see, I was doing some reading the other day on this very area, and it struck me that in some markets, what they had is, for example, use of AI. They have allowed the tourist, basically the inbound traveler, to pretty much dictate what is it that they would like to experience. So in other words, you have customized packaging and so on. And I'm wondering,
Sure.
along that continuum, how far are we? Or are we anywhere?
We got to keep in the game on it. I mean, it's moving so fast, and there's a whole lot more to do. And by the time we figured out what was going on yesterday, it's tomorrow.
Tomorrow,
So,
quite true. No, indeed, it is a very dynamic market, and I mean, would be would be foolhardy to try and ignore that. But then, all right, as we look at we're moving on now from the innovation aspects of it, then to look at the whole issue of safety and security, and I mean, to be honest with the United States, I'm sure the Jamaicans are happy that they got an upgrade in the travel advisory. But some other countries, whereas by and large, throughout the Caribbean, they really haven't had that much of a challenge with that aspect of it. But the truth of it is that these travel advisors that were levied on Trinidad, Jamaica and Bahamas, those two jump readily to mind. To what extent does the traveling public, are they deterred by these travel advisors, or are they only guided by them and do what they want to do anyway?
we've not seen any kind of significant impact of the travel advisory levels.
Okay.
And if you those travel advisories, generally advising to be careful where you go, your destination. I can only give you the opposite experience with any real detailed specificity, but we tremendously in ensuring that all of the areas around the main tourist areas, Arawak Key, downtown Nassau, the cruise port area, Paradise Island, Cable Beach, all were, we supported the establishment of tourist police, CCTV units throughout, communications networks, lighting and landscaping audits on a regular basis. So if you were able to isolate the data of crime incidents based on the volume of people in those areas versus the rest of the the country, it's quite a difference. So but then a lot of it's messaging.
Yeah, no, but there's a Frank. But then now is where I'm confused, because I do recall when both countries got the levels that they had, which was what, 3, if my memory serves me right.
That's right.
There was big hue and cry and how damaging it will be to the product, etc., etc. But at the same time, I mean, there may have been some slight fall at some point or the other, but by and large, from what you have advised here, the product seems to be largely unchanged. The arrivals, by and large, seem basically unchanged. So, I mean, what was the point of all that hue and cry?
Well, you don't want to see that kind of acceleration in a travel level, a travel advisory. You just don't want to see it. And a 3 could be a 4 tomorrow or whatever,
Well, true.
So you don't want to see that at all. And I don't want to get into too much of the details, but I recall that Jamaica and Bahamas had extensive consultations with the U.S. government at the time that those advisories were released. And we actually saw some remessaging along the lines of what I mentioned earlier. Advice, where to go, what to do, be careful about where you go. Now, the problem with the advisories as well is you have a place like Jamaica that's really trying to build up, for example, the Kingston experience. I remember going over to Trenchtown and visiting Bob Marley's home and so on. And it was a lovely experience, really informative, and the tourists that I saw there as well were enjoying. But we were clearly told not to get too far away from where we were. So what that bodes is it presents an opportunity, community to get involved. Community is more important. Community protects what's going on. So we've got to do more. And that's been happening in a number of areas.
Yeah, that reminds me of when I went to Haiti, and the hotel was surrounded by security personnel, and they basically said, "Well, if you go outside of the perimeter, you're on your own. I mean, you might get harmed." So yeah, I take your point, but you see, when I'm looking at this,
it doesn't encourage community tourism at a greater level than we have. we've seen some progress in that area. There's opportunities there.
Well, and that's good to know. And the other thing that I wanted to raise with you, Frank, because we'll have to wrap this up now, but the other thing I wanted to look at with you is in terms of the culture. And when I say culture, I'm talking about the Caribbean experience. Too often, and then perhaps I'm alone in this, but too often I go into hotels throughout this region because, as you know, I travel from time to time. um, Too often I go in there, and what I am faced with is a standard North American fare. I am not getting a sense of the island experience. You have to either specifically ask for it, or you go off property to find something where you can have the local experience. Because even when we're talking about increasing the tourism linkages, etc., if we are not prepared to actually expose the visitor to the culture, then what are we doing?
Right. And looking at the food, the music, the architecture, the whole experience, storytelling, all of that. We do some of that. We don't do enough of that by far. I think destinations that do an excellent job of inculcating Caribbean food and the visitor experience. Jamaica, St. They, they no. I mean, I was in Cayman Islands last week, and we had saltfish and acme on the menu for breakfast. I said, "Oh my God!" And this was at like a 5-star hotel. I
Yes.
said, "Oh my God, I can't believe it." And it was really well done. But we've got to do more of that. There's no question about it. It's product differentiation. You get sun, sand, and sea anywhere in the world, although we've got the best. But you can't get the cultural experience, the diversity of it. Even though we're Caribbean, there's a Caribbean kind of cultural experience. It differs in different jurisdictions, and we don't capitalize on that sufficiently enough. Jurisdictions that are doing that see greater feedback for visitors.
No, yeah, that is an incredibly valid point. But Frank, we have to wrap this up now. And really and truly, what's left for me to do is thank you very much for your time. I do hope we'll be able to have further conversations on this topic as we go forward, because I find this area of, is just far too critical. Too many of our countries, I mean, we have tourism dependency ratios of, well, dependent on where, but it ranges anywhere between 10 to up to 90% of the economies.
Nine Caribbean jurisdictions, 50%, over 50% of their GDP is related to tourism.
Exactly.
Put it real simplified way, if you took tourism out of it, I'd take 50 cents plus out of your pocket. Would you like that? I don't think we would.
Well, don't think so at all. Frank Comita, thank you so much, my brother, for sharing your thoughts with us today. Really appreciate it. And Frank, we do hope that we'll be able to have this further conversations with you on these things as we go forward. So thank you very much.
Thank you, Joseph.
All right, good.
Ladies and gentlemen, thank you for staying with us for this 4th edition of the Caribbean Business Review. And special thanks to our guest this week, Frank Comito of the Caribbean Hotel and Tourist Association, their special advisor, who really shared with us what's happening in the global market, how it's impacting the association within the Caribbean, and how the hotels and tourist association businesses are responding. Really appreciated those insights. And that's what we've had for you this week. And if you want to learn more, take a deeper dive yourself, we invite you to subscribe to the Caribbean Financial Dispatch at caribbeanbusinessreview@gmail.com. But you can also follow us on our new WhatsApp channel. So you can search in the channels for the Caribbean Business Review. It has been a pleasure to be with you this week. I am Sherry Ann Farquharson.